Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and we're talking about the crude oil prices, which, by the way, are trading at the highest level in 2023. If you look at the WTI crude prices, we are at an 8-month highs, and the Brent as well is trading at the highest since November 2022 there. So, well, very strong going there in the matter of last 6 weeks, which have given you positive returns if you were a buyer in crude. The prices have gained up by nearly 16 to 17%, with the expectation that this week as well is headed on a positive note here. Not just crude oil prices, if you look at the products like gasoline prices in US are trading at a 1-year highs. You have natural gas prices trading at a 7-month highs as well. The US gas stocks in US have declined by 2.7 million barrels. Markets were anticipating a much lower number. So even as you are looking at higher crude stocks in this week, up by nearly markets have seen it gain up by nearly 5.8 million barrels. Even after that, because there is a decline in the product inventories, we have seen a support come into the prices. If you look at the demand itself, well, that hasn't really seen a strong surge. Actually, in the month of July, the Chinese imports for crude declined by 18%, and that should have weighed on the prices, but we haven't seen that happen. Instead, we have been making higher highs on a week on week basis. Much of that comes in from the fact that one, the US demand seems to be picking up. Two, that is because OPEC, that is Russia and Saudi Arabia, cutting output. And a lot of rhetoric seems to be coming in from them as well, suggesting that they could deepen output cuts going forward in September and October as well. So that conversation seems to be supporting markets there. Apart from that, it also has to do with expectation that China could be coming in from stimulus sooner than later. That has been supportive. Everything else, when you see that, whether it has been about Chinese imports or the US production numbers, which are hitting near all time highs, if you look at last year, the production was an average of 11.9 million barrels per day. This year, the estimate is that you could be looking at an average of 12.8 million barrels per day, which is much higher than 2019, where we were at 12.6. So we are looking at higher production from non-OPEC members as well. Now, it's going to be interesting going forward and seeing on what OPEC and allies do, because even as they are cutting production, they wouldn't want to lose market share to non-OPEC countries like US. So the next couple of months are quite interesting going forward because of that. The street also does believe that it is really going to be about the range of prices. We are trading at almost $88 a barrel right now. We could be going to 90, but it's not going to sustain there. What you could be looking at in the second half is that markets will come back to 75, 85 kind of a range. That is looking more sustainable, and that is perhaps what Saudi and Russia also know. But given the kind of uncertainty that we are looking at and the rhetoric from OPEC and allies and the speculative money as well following, the crude prices continue to seem to be rising at this point in time. But going forward, the expectation being that you could be looking at correction soon after perhaps a couple of dollars of gains from here.